Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me at the market site in Times Square, New York City, we have Brian Joyce. He's a Managing Director on Nasdaq's Market Intelligence Desk. Brian, it's great to have you with me as always. We're going to take a look underneath the surface on the charts. I want to pull up our first one here. Nasdaq 100, you think a short-term top could potentially be forming?
Potentially. You know, it's hard to make that call. It's been up, a straight wall, up 31% since the first week of October. We had a brief blip in late January. It turned out to be a one-week pullback. But the reason why we potentially could see a top here, this morning we were down more than 2% on the index. Now, just yesterday was at all-time highs. But the weekly pattern right now was forming a gravestone doji, which is a common topping pattern you can see, particularly after a steep uptrend. But just not that alone. But if we look at the weekly momentum, we can see that the RSI, the weekly RSI, formed a double top. The January high peaked at 81, which is an extreme overbought condition, pulled back, and then again this week peaked up, or I should say last week peaked at 81 again, and is now rolling back over. It's pulled back below the 80 level. That's a sell signal used by some, and so I think that gives a little bit more weighting to this bearish candlestick we are seeing now on this week's pattern. Now, with that being said, we have gained back about half of today's losses, and we still have a trading session tomorrow. So certainly very early call to say this is, say, an intermediate term top, but it's something that I think is I have on the radar right now. We highlighted last week how constructive this was looking, and over the intermediate to long term, I should say really over the long term, I still think things look very bullish. But we've had quite a run, and maybe this will.
Yes, at the beginning of the year, the index is up almost 900 points. I mean, we're what, 6-7 weeks into the year, so to see a 1 or 2% pullback is not all that tragic.
Right, on a one given day, correct. But
right.
Maybe this is potentially what I'm thinking is this potentially maybe is the start of a 5 to 8% pullback, if not more. But we'll have to wait and see.
All right, let's take a look at the regional banks. We haven't checked those out in a while, and the potential head and shoulders top may be underway here also. Yeah,
so last week when we spoke, we highlighted some things. Even though the NDX, the Nasdaq 100 looked good, there were some other things going on in the marketplace that were reasons to be cautious, and really evolved around the interest rate complex, which regional banks are very sensitive to. The 10-year 3-month spread is negative. The yield curve is flattening each day. And the 10-year yield is down today to 1.5%, which is very close to 52-week lows, and not that far from all-time lows that we've made in, let's say, 2012 and 2016. So that's not good for banks. Regional banks have grossly been underperforming. We'll get to that next, but this is the chart of the regional bank index, the KRX, and it does look like a head and shoulders topping pattern is building at the prior highs made back in February of 2019. So we certainly are a long ways away. The key support level to there is at the $100 level. We're now at about 103, 104, so it's about 3 or 4 cents below. That neckline, which is where the support is coinciding with the 200-day moving average, so that reinforces the importance of that support. So I would expect that we could very well easily test that. The fact that the Nasdaq 100 is 1 day from all-time highs. It's up 31% over the last 4 months, 5 months maybe, and the S&P 500 is 1 week from its all-time highs. Yet regional banks are about 5-6% below and grossly underperforming. You'd rather see the banks, which are rate sensitive, economically sensitive, doing better than what they're doing.
All right. Well, let's take a look at that now. This is the KBW Banking Index on our next chart here. This is versus the S&P.
Right. So this is the relative strength of the KRX versus the S&P 500. It's a weekly period chart. It goes back about 15 years, and you can see this week the KRX is making new lows on a relative basis. If we were to zoom back 25 years, this is the lowest it's been since about 2002, 2003. So regional banks have grossly underperformed over the long term, and they're still continuing to make new lows. So that's another reason maybe that we should maybe be looking at the broader market as maybe reasons that we should temper a little bit the extreme bullishness that we're seeing.
All right, Brian, thanks so much as always for joining us, and thank you for joining me on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.